Hello students, we can have a quick revision into your paper number 13, Corporate and Economic Laws for your June 2025 examination. So as it is a quick revision, we will be covering only the major topics from each and every chapter. So first we will move to the chapter Declaration and Payment of Dividend. Okay, so this section or this chapter contains section 123 to 127. So there are two types of dividend. One is interim dividend and the second one is final dividend. Interim dividend is a dividend which is declared by board of directors, and the final dividend is the dividend which is recommended by board of directors and which is approved by members at AGM or EGM. So final dividend will be passing through two stages. One is recommendation by board of directors, which is known as proposed dividend, and the second one is declaration by the members, which is known as the final dividend. Okay, when we are talking about the sources of interim dividend can be declared out of surplus in P&L account, profit of the financial year. That is profit of the financial year in the sense that after completion of financial year till the date of AGM, there is a gap. So during that period also, your interim dividend can be declared. So interim dividend can be declared out of the profit which you have made during that particular financial year, or the profit which you have earned in the quarter immediately preceding date of declaration of interim dividend. So one thing that you have to note is that if you have incurred loss up to the quarter in which your if you have incurred loss up to the quarter immediately preceding date of declaration of your interim dividend, the rate of interim dividend shall not exceed average rate of dividend declared during the immediately preceding 3 financial years. Okay, then when we are talking about the final dividend, you are having two sources. Number one is profit after providing depreciation of current financial year, previous financial years remaining undistributed, then or out of both. Okay, the second source is that amount which is given by government in pursuance of any guarantee which is given by the particular government. Okay, so one more thing that you have to note in this area is that if you have not earned profit in any financial year, or if the profit of the financial year is inadequate, you can declare your final dividend, not interim dividend. Final dividend can be declared out of free reserves. Please note, only from free reserves. So when you are declaring your final dividend from free reserves, you have to comply with your rule number 3 of company's declaration and payment of dividend rules 2014. So under rule 3 there are 4 conditions. So you have to comply all the 4 conditions. Number 1 is that the rate of dividend that you are declaring should not exceed the average rate of dividend declared in the immediately preceding 3 financial years. Number 2, the amount that you are withdrawing from free reserves shall not exceed 10% of paid up plus free reserves. Number 3, you have to take the amount that you have obtained in step number 2, then you have to deduct the loss. Okay, loss that you have incurred in the financial year. Number 4, the balance in free reserves after withdrawal shall not fall below 15% of paid up. So you will be getting 4 amounts. The least of the amount is that particular limit that you can draw from free reserves. Okay, so that is about your types of dividend, their sources, etc. Then when we are talking about the declaration of a final dividend, that will be going through 2 stages as I have mentioned earlier. One is recommendation by board of directors, then the second one is approval by members. So once it is approved, it has to be paid in 30 days. In parallel to that, you have to transfer the amount of dividend into a separate scheduled bank account within 5 days of declaration, which is explained in 123 subsection 4. When you have declared your dividend, whether it is interim, whether it is final, when you have declared your dividend, you have to pay the dividend within 30 days. If you are not paying the dividend within 30 days, you have to transfer the amount to UDA, unpaid dividend account in the next 7 days. So one more thing that you have to note here is that if you are not paying, or non-payment of dividend within 30 days may be because of any legitimate or valid reasons, or there may not be any valid reason. Okay, so if there is no valid reason, that will be attracting penalty under section 127. So 127 of Companies Act explains that if you are not paying dividend within 30 days of declaration, all the directors who are knowingly a party to the default will be liable for imprisonment up to 2 years and penalty of 1,000 per day, and the company will be liable to pay interest at the rate of 18% per annum. Okay, so when you are not paying the dividend within 30 days and the reason for non-payment is any of the reasons which is mentioned in 127, you will not be attracting, or the company will not be attracting, any penalty. Number one is if the non-payment is due to operation of any law, if the shareholder has given any instruction or direction to the company and it could not be complied and the same is communicated to the shareholder, if there is any dispute regarding right to receive dividend, or if the amount of dividend is lawfully adjusted by the company, or if there is any reason which is out of the control of the company. So if the non-payment is because of any of these reasons which is mentioned, you will not be attracting any penalty under 127. Okay, but you have to do one thing. You have to transfer the amount to unpaid dividend within 7 days after completion of 30 days. Okay, so these are two provisions. Many students ask me this doubt, that there is interest of 18% in 127 and interest at the rate of 12% in 124. So what is the correct rate of interest? See, these sections are different sections. If you are not paying dividend within 30 days and you don't have any valid reason, you will be liable for 18%. Okay, and if you have not paid the dividend, transferring to unpaid dividend account is extremely or entirely a different provision. So if you are not adhering to that provision, if you are not complying with section 124, you will be liable for interest at the rate of 12%. So both the provisions, both the sections are different. Okay, if the amount of unpaid dividend remains in unpaid dividend account for 7 years, it will be transferred to IEPF, Investor Education and Protection Fund. Okay, so these are the major topics which is related to the topic dividend. So now we'll move to the concept of Insurance Act. Okay, so first of all, we will be discussing the provision, the principles related to insurance. There is the principle of utmost good faith, both the parties to give clear and concise information regarding the terms and conditions. Okay, then insurable interest. Insurable interest means the subject matter should provide gain to the insured when it is existing, and it should incur loss when it is lost, destroyed, stolen, etc. Okay, then proximate cause means the nearest cause will be taken if it is not insured against all the cases, or all the causes, I'm sorry. Okay, then indemnity. Indemnity means the insurer will be, or they are agreeing to indemnify or restore the insured to the previous position before the loss. Okay, then subrogation means after indemnifying, the ownership of scrap or pieces will be passing on to the insurer. Okay, then contribution. Insured can claim up to the actual loss. That means insured is not able to make profit out of the insurance contract. Loss minimization, the insured will have to take each and every step to minimize the losses, just like your fire extinguisher, or all the precautions you will be having to take in case of all the insurances. Okay, then when you are talking about the minimum paid up requirement under section 6 of Insurance Act, if you are a life insurer or life insurance company or general insurer, you will have to maintain your minimum paid up capital at rupees 100 crore. If you are doing health insurance exclusively, you will have to maintain your paid up at 100 crore. If you are doing reinsurance exclusively, you will have to maintain your minimum paid up at rupees 200 crore. So while computing 100 CR or 200 CR, you have to note that you have to deduct your preliminary expenses. So after deducting the preliminary expenses, you will be required to have 100 CR, 100 CR or 200 CR. Okay. When you are discussing about the section 7, which is related to depositing the amount with RBI by the insurance company. If you are life insurer, you have to deposit 1% of gross premium subject to 10 CR. That is minimum 1%, maximum 10 CR. If you are general insurer, you will have to deposit minimum 3% subject to 10 CR. If you are reinsurer, you will have to deposit a maximum of 20 CR. There is no minimum limit, maximum 20 CR. Okay, then we'll move to section 29 of Insurance Act 1938, which is prohibition on loan by the insurance company. So this section 29 is having two parts. Insurance company cannot give loan to directors, managers, officers, actuaries, or any entity in which these persons hold such position. So basically 29 subsection 1 explains that the giving or providing loan is prohibited. But if you are a life insurer, you can give insurance on the security of life insurance policy to your policy holders. The amount of loan should be within the surrender value of your life policy. Okay, the amount of loan should be within the surrender value. Then again, insurance company can give loan to banking company. Then insurance company can give loan to holding company or subsidiary company with IRDA approval. For giving loan to your holding company or subsidiary company, you will be requiring the approval of IRDA. Then we'll move to the provision of nomination explained under section 39 of Insurance Act. So any person can be nominee. Minor can also be nominee in insurance contract. So in the case of minor, you will have to appoint another person known as appointee to receive the benefits. So as you know, under Indian Contract Act, a minor cannot enter into contract. So in that case, you will have to mention a person appointee to receive the benefits. Okay. Then next provision is assumption of risk only after receipt of premium. This is section 64 VB. Okay. So risk can be assumed by the insurer only after receiving the premium in advance. Okay. Then questioning of life insurance policy. This is section 45 of Insurance Act 1938. So insurance policy, life insurance policy cannot be called in question after 3 years from the date of issue or from the date of commencement of risk, date of revival or date of rider, whichever is later. So there are four dates. Date of issue is there, date of commencement of risk is there, date of revival is there, then date of rider is there. So which date is coming later? From that date, you will be counting 3 years. After 3 years, your policy cannot be questioned. But within 3 years, it can be questioned. There are two grounds: on ground of fraud or on ground of misrepresentation or suppression of fact. So willful act will be amounting to fraud. So under fraud, the policy will be repudiated, cancelled. There is no need to pay paid premium on the part of insurance company. But if if the policy is questioned within 3 years on ground of misrepresentation or suppression of fact, it will be repudiated for sure, but the premium will have to be paid by the insurance company in 90 days. Okay. Now we'll move to the Banking Regulation Act 1949. So we'll discuss section 7, use of bank, banker, banking company, etc. So a company can carry banking business only if they are using the term bank, banker, banking company, etc. No other company can use the term bank, banker or banking company except the subsidiary of banking company. They can use that term. They can mention that we are subsidiary of this bank. Then second thing is that it can be used by association of banks for protection of mutual right and interest of employees, etc. So they have to be registered as Section 8 company. Then Section 9 of Banking Regulation Act related to disposal of non-banking asset. So banking company cannot hold immovable properties acquired for more than 7 years. So if it is used for, or if it is acquired for its own use, there is no need to be disposed. Okay. Then if it could not be disposed by the banking company within that period of 7 years, they can claim for, or they can request for an extension of a maximum 5 years from Reserve Bank of India. So Reserve Bank of India will be giving this approval, this 5 years extension, only if they are of the belief that it is in the best interest of the banking company and depositors. Okay. Then discussing about the concept of reserve fund explained in section 17, minimum 20% of profit should be maintained as reserves. As per RBI circular, it has requested all the banks to maintain 25%. If a banking company has to maintain, or if they are not able to maintain 20%, they have to apply to RBI. Then RBI will be recommending to central government will be giving the approval, and they will be, or they have to satisfy that amount in reserve fund share plus share premium is not less than paid up capital of the banking company. Only if this condition is satisfied, the central government will be giving the approval. Then CRR of a non-scheduled bank, this is section 18. So many students used to ask me this doubt. CRR of a banking company is changing. When we are giving the same in chat GPT, it is giving different rates. See, you have to understand section 18 is discussing about the CRR of non-scheduled banks. It is 3%. While we are talking about the scheduled banks, it will be decided by RBI in its monetary policy. It will be changing on regular basis, but CRR of non-scheduled banks will not be changing like CRR of scheduled banks. Then you have the maintenance of SLR, maintenance of assets at 75% of time and demand liability, section 25, etc. Then we'll move to Companies Act, appointment and qualification of directors. Okay, so when we are discussing the chapter directors, we are having three chapters. Number 1, appointment and qualification of directors. Chapter number 11 of Companies Act, which is containing section 149 to 172. Then meetings of board and its powers, 173 to 195. Then appointment and remuneration of managerial personnel, 196 to 205. So first we'll discuss about appointment and qualification of directors. So there is 149 subsection 1 clause A, clause B, minimum and maximum number of directors. In OPC, 1 director, private 2, public 3 directors, maximum is 15. If you want to appoint directors beyond 15 in any of the company, you have to pass special resolution. Then maximum limit of 15 and special resolution for appointing directors beyond 15 is not applicable to government company and section 8 company. Okay, so when you are discussing about the type of directors, there are three type of directors. One is specified in articles of association. So it is here specified in articles of association. You are having first directors. Okay, then directors appointed by members, appointed by board. So appointed by members, you are having Indian resident director, woman director applicable to listed company, unlisted public company having paid up 100 CR or above, or unlisted public company having turnover 300 CR or above. Small shareholders director, which is applicable only to listed company. Small shareholder means a shareholder whose face value or nominal value does not exceed rupees 20,000. Okay, so small shareholders director will be appointed by listed company either suo moto or on application given by 1000 small shareholders or 10% of total small shareholders, whichever is less. Then independent directors, which are applicable to listed company, unlisted public company having paid up 10 crore or above, or turnover 100 CR or above, or outstanding aggregate outstanding loan debenture deposit in excess of 50 CR. Then appointed by board, you are having additional director, which is authorized in articles and appointed by board. Then a person who fails to get appointed in general meeting could not be appointed as additional director. The tenure of additional director will be till next AGM or the last date on which AGM has to be conducted. So if there is any absence of original director from India for 3 months or above, the board will be appointing alternate director. Okay. Then nominee directors are the directors who are nominated by third parties like bank, financial institutions, statutory bodies, and appointed by board of directors. If there is any casual vacancy, that will be filled by board. You have to please note, if there is any casual vacancy of a director who is appointed by members, that can be filled by board of directors. If your independent director's post is vacant, that can be filled by board of directors. If any director is appointed by members, that director is resigned, that can be filled by board of directors. So if any director is appointed by board and there is casual vacancy, it cannot be filled by board itself. So board can fill only the casual vacancy of a director who are appointed by members. Okay, then we'll discuss about the concept of rotational and non-rotational directors, which is applicable in the case of public company only. So in public company, there are two types of directors: rotational directors whose tenure is not fixed, and non-rotational directors whose tenure is fixed. Okay, so minimum two-thirds of the total number of directors of a public company should be rotational, and maximum one-third of total directors can be non-rotational. So total directors does not include independent directors, nominee directors who are nominated by financial institution which is constituted under separate act of parliament or legislature. Okay, so when you are having rotational director, the concept is that they will be retiring at every AGM. That post can be, they can be reappointed. You can appoint any other person, or you can make that position can be left vacant. Okay, so if you have decided to fill that post, but you could not fill that post because of any technical issues and all, automatically your AGM will be adjourned to next week. So in next week AGM also, or in the adjourned AGM also, if that position could not be filled, automatically the retiring directors will be reappointed. Okay, the rotational directors who are retiring the AGM will be automatically reappointed. So the automatic reappointment will not take place if there is, or if a motion was put to and it is lost, or if the rotational or retiring directors has expressed their unwillingness, if they are disqualified, or if any ordinary or special resolution is required for their appointment, or if there is contravention of section 162. Okay, then we'll discuss about disqualification of directors explained in section 164. So there are three kinds of disqualification: personal disqualification, 164 subsection 1. Okay, a person who is of unsound mind, undischarged, insolvent, applied to court for adjudicating as insolvent, and the application is pending, and so on. Okay, there is disqualification on the basis of a default by company, which is explained in 164 subsection 2. If a company failed to file annual return or financial statement for 3 consecutive years, or if a company failed to pay interest on deposit, repay deposit, interest on debentures, redeem debentures, or pay declared dividend, and the failure continues for 1 year or above, all the directors who are, or the persons who are directors or who were directors, will be disqualified for a period of 5 years. Then additional disqualification 164 subsection 3, which can be specified by private companies only. It cannot be specified by public company. Additional disqualification can only be specified by private companies. Then we are having vacation of office of directors, in which circumstance a director will have to vacate the office when he is incurring disqualification under 164, absenting for 12 months, absenting from all the board meetings, or absenting from all the board meetings held during the period of 12 months, then contravening of section 184, disclosure of interest, failed to disclose interest, etc. Then resignation of director, a director can resign by intimating the company in writing. Okay, the resignation will take place from date of receipt of intimation by the company, or the date specified by the director in the resignation letter, whichever is later. Then removal of director 169, you will have to give a special notice. A special notice will have to be signed by members holding 1% of voting power or 5 lakh rupees, whichever is less. Okay, then You can remove a director by passing ordinary resolution. If the director is appointed by passing special resolution, you will be requiring special resolution to remove that director. Then right of person other than retiring director to stand for directorship. If any person want to stand for directorship, 1 lakh or such higher amount has to be deposited. The amount will be refunded only if the person get elected or if that person is securing more than 25% of the valid votes casted. Okay. Then appointment of 2 or more directors in single resolution. So in general meeting, you cannot appoint 2 or more directors through single resolution. It is not possible. Separate ballots should be used, but you can appoint 2 or more directors in single resolution by complying this provision. You will have to obtain the approval of members with no votes being casted against. No member should vote against that motion, and after that, if you have obtained that resolution, if you have obtained that motion, you can pass ordinary resolution and appoint 2 or more directors in single resolution. Okay. Then while discussing about director identification number, this number is mandatory. If you are not having director identification number, you will be disqualified under 164 subsection 1. A person cannot be appointed without director identification number or any other number, just like DPIN. So person cannot apply, obtain or possess more than one DIN. Okay. So DIN cannot be cancelled, surrendered, deactivated except in certain circumstances. If it is duplicated, it will be merged, or if it is obtained in wrongful manner or fraudulent means, death of DIN holder, insolvency, unsound mind, etc., that DIN will be cancelled. But if the DIN holder has certified any forms, it cannot be cancelled unless the death or insolvency of that particular DIN holder. Okay. So if the DIN holder is specifying that I have not signed any forms, please cancel my DIN, MCA will be cancelling the DIN unless the DIN will not be cancelled. Okay. Now we'll move to chapter 12 of Companies Act, which is meeting of board and its powers. So number of board meeting that has to be conducted, held by a company. If it is OPC, small, dormant, startup, private, they will have to conduct minimum 1 board meeting in each of calendar year half, and gap should not be less than 90 days. Minimum 90 days gap should be there. Other companies, minimum 4 board meetings in a calendar year, and gap should not exceed 120 days. 120 days should not be exceeded. So mode is physically present, video conferencing or other audio visual means. When discussing about the quorum, if you are a section 8 company, 25% of total strength or the 8 directors, whichever is less, and minimum 2 directors, means which should not be less than 2. For example, if a section 8 company is having 4 directors, 25% of the total strength is 1, or 8 directors, whichever is less. So 1 will be there. With 1 director, you cannot have quorum, right? So minimum 2 directors should be there. In other companies, 1/3 of total strength or 2 directors, whichever is higher. So if there is any fraction in finding out this, it will be rounded off to the next digit. Okay, this will be rounded off to next digit. In both the cases, if you're taking your 25% also, okay. Then while computing the total strength, directors whose position is vacant will not be counted. Okay, then we'll move to passing of board resolution. Board resolution can be passed either through circulation, or you are having resolution that can be discussed only at board meeting. So circulation refers to if your board meeting is over, you were not able to discuss any item that cannot be deferred till next board meeting. It is an item of routine nature, or if the cost of conducting board meeting is very high, you can go for circulation. There are certain items in 179 subsection 3 which can be discussed only at board meeting. Okay. Yes. Then you are having committees of board. You are having audit committee, vigil mechanism committee under 177, NRC and stakeholders relationship committee under 178. Audit committee is applicable to listed company, unlisted public company having paid up 10 crore or above, turnover 100 crore or above, outstanding loan debenture deposit in excess of 50 crore. Vigil mechanism for listed company, company having loan borrowing from bank and public financial institution in excess of 50 crore, companies that has accepted deposit from public, which is eligible public company. Okay. The provisions of audit is applicable. The threshold is applicable to NRC as well. Listed, unlisted public having 10 crore or above paid up, turnover of 100 CR or above, outstanding loan debenture deposit in excess of 50 CR is applicable to NRC also. Stakeholders Relationship Committee is applicable to a company which is having more than 1000 shareholders plus debenture holders plus deposit holders plus any other security holders at any point of time during a financial year. Okay, then you are having contribution by board 181 charitable fund, 182 political party, National Defense Fund 183. So if the contribution to charitable fund is up to 5%, up to 5% of average net profit of preceding 3 financial years, you will be requiring only board resolution. So if it is beyond 5% or in excess of 5%, exceeds 5% of average net profit of preceding 3 financial years, you will be requiring ordinary resolution. So for political party contribution, there is no limit. You can contribute to any recognized political party, any person, the contribution to any person which will be affecting the support for any political party for a publication, souvenirs, etc. There is no limit. The amount will have to be given either by account pay check, draft, account pay draft, electronic clearance system or any other instrument. Okay, but a government company or a company which is in existence for less than 3 years cannot contribute to political party. National Defense Fund or any fund which is used for national defense, for example Prime Minister's National Relief Fund, you can contribute to that. There is no limit for contribution. You will be requiring only board resolution for the contribution. Okay, then related party transaction, section 188. So either your board approval is required or board approval plus ordinary resolution is required. So it is ordinary resolution or board approval, board resolution plus ordinary resolution is requiring if the limit or if the transaction amount of transaction is up to, sorry, when it is reaching certain limit. If it is related to sale, purchase or supply of goods or material, it will be 10% of turnover. If it is related to selling, disposing of property, the limit is 10% of net worth. Leasing, 10% of turnover. Services, availing or rendering of services, 10% of turnover. Office or place of profit which is more than rupees 2,50,000 per month. Then underwriting, more than 1% of net worth, more than 1% of net worth. Okay, then we'll move to chapter 13 of Companies Act, appointment and remuneration of managerial personnel. So we'll be discussing MD, 2 clause 54 MD, 2 clause 53 manager, 2 clause 94 whole-time director. So 196 subsection 1 explains there should not be simultaneous appointment of MD and manager. You cannot appoint MD and manager at the same time. Okay, then the term of this managerial personnel is for a period of 5 years, maximum 5 years. You can reappoint this person before the expiry of term, but not earlier than the 4th year. Then there is disqualification under 196 subsection 3, person who is below 21 years or has attained 70 years. Then a person who is undischarged insolvent or has at any time been adjudged as insolvent, suspended payment to creditors at any time or has made composition with them, convicted for any offense and imprisoned for more than 6 months. Approval is board resolution is required, ordinary resolution is required, central government approval is required in certain cases. Okay, so validity, if you are appointing a person as MD or manager and if you are not getting the ordinary resolution, the prior act which they have performed will not be becoming invalid, which is validity of act. When you are discussing about the remuneration, when you are discussing about the remuneration of this managerial personnel, overall remuneration limit is maximum 11%. Okay, if there is more than MD, one MD or whole-time director, collectively you can give 10%. Okay, if there is only one MD or one whole-time director or one manager in your company, you can give 5% to that particular person. And to your directors, if there is no MD, no whole-time director, no manager in your company, each of the directors can be given, each directors can be provided with 3%. Okay. If there is MD or if there is whole-time director or if there is manager, each director can be given at 1% of net profit. So this case is only when there is net profit. Okay, so now we will move to SEBI regulations or laws related to SEBI. So first we will be taking or discussing SEBI issue of capital and disclosure requirement regulation 2018. You are having person who are not eligible to make IPO or FPO. So these persons are issuer, promoter group, selling shareholders who are debarred by SEBI, or if your director or promoter of the issuer is director or promoter in any other company which is debarred by SEBI. Okay, or if your issuer, promoter or director is fraudulent borrower or willful defaulter, or if your director or promoter is fugitive economic offender, or if there is any convertible securities pending, you are not allowed to make IPO or FPO. Then you are having the eligibility routes. Eligibility routes, there are two routes. One is you are having profitability route. Okay, if you want to make your IPO or FPO, there are two routes. One is profitability route. If you are not going through profitability route, you can go through qualified institutional buyers route, which is known as QIB route. So for profitability route, I'm sorry, for profitability route, you have to satisfy four conditions. Your net tangible asset should be minimum 3 crore or above, minimum 3 crore in each of preceding 3 financial years of 12 months each. So first condition is that your tangible asset should be minimum rupees 3 crore. Then average operating profit, net average operating profit should be minimum of 15 crore in preceding 3 financial years. Then if you have, you should be having net worth of rupees 1 crore or above. Then if you have changed your name in any of 12 months, preceding 12 months, minimum 50% of the revenue should be associated with the new name. So you have to understand, when you are keeping tangible asset, maximum 50% can be kept as monetary asset. Not more than 50% can be kept as monetary asset. If there is more than 50% in monetary asset, firm commitment to be made by the company issuer to utilize the same in business or project. And if you are you have to satisfy the second condition, net average operating profit of 15 crore in preceding 3 financial years, you should be ensuring that there is no loss in any of the financial year. Okay, then you are having, if you are not satisfying any of this condition under profitability route, you have to go through qualified institutional buyers route. Then conditions for IPO, you have to make arrangement with a stock exchange, one among them to be selected as your designated stock exchange. You have to make agreement with your depository to for dematerialization of shares. Promoters share should be dematerialized, all the partly paid up shares to be fully paid up, firm arrangement of finance to be made. Additional conditions, minimum 1000 LOTs should be there, 90% should be minimum subscribed. If there is no minimum subscription, you have to refund the same in 4 days. Compliance officer to be appointed, registrar to issue, share transfer agent to be appointed, and so on, etc. Okay, now moving to SEBI Prohibition of Insider Trading Regulation 2015, you have the concept of insider, connected person or person having access to unpublished price sensitive information. Please note that there is an amendment in the definition related to persons deemed to be connected. So the first part was immediate relative, it is changed to relative. Okay, immediate relative is still there, a new concept relative is introduced, and the definition of relative has also made under that regulation. Okay, then there is the provision related to communication of unpublished price sensitive information. You cannot communicate, you cannot procure, you cannot provide access unless it is for legitimate purpose. You are giving the same to bank, suppliers, customers, etc. The person to whom you are giving, they have to be treated as insiders, and you have to make sure that they are not misusing the data. Okay, then you have to keep the same in structural digital database, and it should be preserved for 8 financial years. You are having initial disclosures which you have to make in 7 days or within 30 days of applicability of regulation. Continuous disclosure in 2 trading days if your trading in a calendar quarter exceeds 10 lakh. Okay. Then SEBI substantial acquisition of shares and takeover regulation 2011. You are having the acquisition if the target company is listed. If the target company is listed, SEBI provision will be applicable. You are having the acquirer company, person acting in concert, person having the same object of acquirer to acquire shares of target company. Then there is the concept of open offer disclosures. So if the acquirer plus PAC holding in target company is less than 25% of voting power, and the acquisition is entitling or they are able to exercise 25% or more voting power in the target company, they have to give open offer of 26%, okay, to the shareholders. And if the company acquirer plus PAC is already holding 25% or more, and if their acquisition in a financial year is more than 5%, okay, they have to give open offer obligation of 26%. 26% is fixed in regulation. Okay, then we'll move to the concept of FEMA. This is a 5-mark question, a chapter consisting, or 5-mark question will be asked. The most important part in FEMA is regarding the residential status. So you have the definition of person resident in India, person resident outside India, 2U, 2V and 2W. So person resident in India, PRI, refers to a person who resides in India for more than 182 days, minimum 183, or any entity which is registered in India, branch or office or agency in India, owned or controlled by person resident outside India, branch, office or agency outside India, owned or controlled by person resident in India. Then you are having capital account transaction and current account transaction in FEMA. Okay, so in current account transaction, you are having, this is not capital, this is current account transaction. You are having prohibited current account transaction, transaction requiring government approval, transaction requiring RBI approval. Then there is a liberalized remittance scheme under RBI approval. So 250,000 USD can be availed by a person, an individual person, for items like a private visit to any country except Nepal, Bhutan, gift going abroad for employment, immigration, etc. 250,000 USD in a financial year. So this is current account, prohibited, central government, RBI. It is not capitals bifurcation. Okay, so then moving to anti-competitive agreement under Competition Act. Competition Act is also a chapter which consists, or from where you will be getting 5-mark question. So first concept is anti-competitive agreement. You are having horizontal agreement or vertical agreement. Horizontal in the sense that the enterprises are in the same marketing stage. Okay, if they are in different marketing stage, it will be vertical agreement. So horizontal types are price fixing, limiting production or supply, allocation of market share, bid rigging, etc. Vertical types are tie-in arrangement, exclusive dealing agreement. It was exclusive supply agreement. It is now exclusive dealing, exclusive distribution, geographical area related, refusal to deal and resale, price maintenance. Okay, so anti-competitive agreement means an agreement which is having appreciable adverse effect on competition. Then the second concept of this chapter is abuse of dominance. Abuse of dominance. Dominance means a position of strength which is enjoyed by an enterprise in relevant market in India, which enable it to operate independently of competitors, or which affect competitors or consumers in its favor. So the dominance is not bad. Dominance is not bad, but its abuse is prohibited under Competition Act, Section 4 of Competition Act 2002. Then Section 5 of Competition Act is explaining about combination. So as I mentioned in the amendment video, there is amendment in the thresholds for filing notice of combination. So assets more than 2,500 CR, turnover more than 7,500. If it is group, more than 10,000. If it is group, your turnover will be more than 30,000. Then more than 1.25 billion and minimum 1.125 crore. Then more than 3.75 billion and minimum crore in India. It is or, not and. Then more than 5 billion and minimum 1,250 crore in India, or more than 15 billion and minimum 3,750 crore in India. So these are the new thresholds. Okay, either assets condition or turnover condition will have to be satisfied depending upon whether you are individual, group, whether you are having assets and turnover only in India, whether any of the enterprise are having assets or turnover outside India. Okay. Then PMLA, Prevention of Money Laundering Act 2002. So money laundering means earning of income deriving property by committing a scheduled offense and projecting it as white money or untainted money or property. Okay. And siphoning of funds refers to earning of income deriving property by committing an offense. There is no scheduled offense concept, only offense. So scheduled or predicate offense are having three parts. Okay, part A, which is consisting of 29 paragraphs, part B, which is consisting of only one section, 132 of Customs Act 1962, false declaration in bill of entry, then part C, offenses of cross border obligations. Then stages in money laundering, placement is there. Okay, then layering is there. You are moving the funds to distance and the funds are coming back to the Indian financial system. Then reporting entity and its obligation under section 12, you have to report the transaction of prescribed nature to the director. You have to keep the record of the transaction which enable to reproduce the transaction. Then the beneficial owner's identity to be kept for 5 years. Then you are having suspicious transaction report, transaction in cash or not, which gives suspicion that it involves proceeds of crime. It is made in unusual circumstance. It is not having any rational concept, or it is not matching, suspicious transaction. Then chapter 14 of Companies Act, inspection, inquiry and investigation. Inspection and inquiry will be made by ROC. Then investigation will be made by central government, 210, section 210. Then serious fraud investigation office, section 212, NCLT, section 213, investigation into membership, section 216, investigation into concept of related companies also. Then you are having chapter 15 of Companies Act, compromise arrangement and amalgamation. You will have to apply to NCLT. Then NCLT will be ordering meeting of members or creditors. And please note that if you are conducting the meeting of creditors or members, your approval is a special kind of approval. You will be requiring the approval of majority who has voted in favor and against and representing 3/4 value. Okay, so if you are there is a meeting of 100 members, you will have to get the majority members approval, means 51 members approval should be obtained. And if the 100 members are holding 5 lakh rupees of share capital, or if they are creditors 5 lakh amount outstanding, majority number should be obtained. That majority should hold minimum 3/4 of the value. Okay, so if 5 lakh is the value, they should be holding minimum 3,75,000. So if you are getting a case question, please expect this question from this chapter. Last time it was not asked, last attempt, but if you are getting a question from this chapter, I believe that this kind of case questions are very common. So majority in number should be there, holding 3/4 value. Then while talking about the concept of amalgamation, all the provisions of section 230 will be there, plus 2 other provisions will be added to that. Then you are having the concept of fast track merger. Fast track merger, merger between holding company and wholly owned subsidiary, two small company, two startup private limited company, small company, startup private limited company. Fast track merger is there. Then cross border merger and acquisition between companies incorporated in India and incorporated outside India or notified in notified jurisdiction. Then prevention of oppression and mismanagement, chapter 16 of Companies Act 241 to 246. So oppression means lack of probity and fair dealings. You are having the case of Force and versus Harbotil. So if you are making application for oppression mismanagement, it has to be made by either 100 members, 10% of total members, one or more members holding 10% of issued capital, whichever is less. So please note, you have to see if these condition 100 or 10% should be obtained first. You have to check whether it is coming under 1 or 2, whichever is less you have to take. That means 100 members or total 10% of total members, you have to take 10% of the total members. So you have to take the least condition of these two, and you have to check whether application is made by any such members. For example, a company is having, I'll explain with an example, a company is having 500 members. Okay, so application was made by 40 members. Okay, so you will be checking 100 members or 10% of total members. So 100 or 10% of total means 50. So whichever is less, 50 is less. Okay, so application is only made by 40 members. So you will have to check the third condition also. Third condition says that if the 40 members are holding 10% of issued capital, the application will be accepted. Otherwise, it will be rejected. And please note that NCLT is having a special power to waive off this requirement. Means if the application is made by 40 members and the 40 members are not holding 10% of issued capital, NCLT can waive off this requirement. Okay, then one more thing is there, if application is made by such required number of members and after that members are withdrawing the application, that is not a concern. The members requirement is required only at the time of making the application. After that, if they are withdrawing, there is no issue. Okay, legal heir of deceased person can make application if that person's name is not registered in members, etc. There are a lot of cases, there are a lot of provisions related to this. Okay, yes. So last time also we got a question like this. So if we are getting question this time also, that will be very good for you. Okay, then you are having the concept of SARFAESI Act. There is asset reconstruction, securitization, the concept of enforcement of security interest, which is explained in section 13 subsection 4. Okay, so enforcement of security interest can be made only after the asset is classified as NPA, non-performing asset, which is in which interest or principals remains unpaid for 90 days. Okay, so the secured creditor will be giving an intimation to the borrower to make the payment within 60 days. If the payment is not made in 60 days, they will be taking the possession, taking the ownership or management of assets, or appointing manager, or require any person from whom any amount is due to make the payment to secured creditor and all. So these action will be taken under section 13 subsection 4 of SARFAESI Act. Okay, you are having chapter 9 of Companies Act, accounts of companies. So under section 128, you are having location where your books of accounts to be kept, manner, preservation, inspection. You can keep the same in your registered office. If you are keeping in any other place in India, you will be requiring a board resolution and it has to be filed with ROC within 7 days. You can keep the books of accounts in e-mode or physical mode. If you are keeping in e-mode, you have to comply the rules of the provisions which is specified in Rule 3. Preservation will be for 8 financial years. Inspection will be allowed only for directors during business hours. The financial statement preparation is explained in section 129. If the company is having any subsidiary or associate company, consolidated financial statement is also mandatory. Consolidation can be avoided if the company is wholly owned subsidiary or partly owned subsidiary of another company, then all the members have been intimated in writing and no members have been objected, then it is not listed company. Ultimate company is filing financial statement as per schedule 3 and complying with accounting standard. Then reopening of books of accounts, you have to apply. You means central government, income tax authority, SEBI will be applying to tribunal. Tribunal will be seeking representation and they will be ordering to reopen, and the recasting will be final. Voluntary revision, which is explained in section 131, you can revise your board report or financial statement of preceding 3 financial years. Okay, if you are having a belief that it is not complying with 129 or 134. Okay, so revision cannot be made more than once in a financial year. You are having section 132 National Financial Reporting Authority, then for your accounting standards and standard of auditing. Accounting standard 133, it will be recommended by Institute of Chartered Accountants of India, reviewed by NFRA, and central government will be notifying. Board's report content is there, signing of board's report. Then signing of financial statement, which is explained in section 134. Then corporate social responsibility, section 135. If your net worth is 500 CR or above, turnover is 1000 CR or above, or net profit is 5 CR or above. Circulation, if it is listed company, make available for a period of 21 days before AGM. For other companies, you have to send at least 21 days before AGM. So if it is not sent, you have to get approval of majority of members holding 95% of paid up. Then filing of financial statement, section 137, within 30 days of AGM, you have to file financial statement. Internal audit is applicable to section 138. It is applicable to listed company, unlisted public company having turnover of 200 CR or above, outstanding loan borrowing from bank or public financial institution in excess of 100 CR at any point of time in during the financial year, paid up of 150 CR or above, outstanding deposits of 25 CR at any point of time, 25 CR or above at any point of time during the financial year. And it is applicable to a private company on the basis of their turnover 200 CR, outstanding loan borrowing from bank, public financial institution in excess of 100 CR. Okay. Then while discussing about chapter 10 of Companies Act, Audit and Auditors, you are having the concept of first auditor and subsequent auditor in government company and other company. You are having the concept of rotation if it is individual for 5 years, I'm sorry. Then for firm, that will be for 5 years itself. Cool off period is 5 years. Then individual auditor can be appointed for one term. If it is firm, they can be appointed for one term, reappointed for another term. Okay, rotation is applicable for listed company, public company paid up 10 crore or above, private company paid up 50 crore or above, or any company outstanding loan or borrowing from bank, financial institution for 50 crore or above, or which has accepted deposit from public deposits of 50 crore or above. Then resignation of auditor, you have to resign by intimating company, central government, CAG, etc. Disqualification of auditor, which is explained in section 141 subsection 3 of Companies Act. Then remuneration of auditor 142, powers and duties of auditor 143. In this section you are explaining the power, duty, then provision with respect to CAG audit, provision with respect to branch audit, then reporting of fraud by auditor 143 subsection 12 to 143 subsection 15. So if the fraud is less than 1 CR, it will be reported to board. 1 CR or above, it will be reported to secretary of MCA. Okay. Then auditor not to render certain services, which is explained in 144, like accounting, bookkeeping, internal audit, design and implementation of financial information system, etc. Then auditor to sign audit report, auditor or his representative to attend AGM, punishment under 147, cost audit under 148. Okay, so these are the provisions related to your audit and auditors. Then companies incorporated outside India. Companies incorporated, foreign company is explained in this chapter. Foreign company, which is explained in section 2, clause 42, as company or body corporate incorporated outside India, having place of business in India, whether by itself or through agents in physical or remote, and conducts any activity in India in any other manner. But if you are satisfying any of this condition also, you will be treated as a foreign company. So the provisions applicable to foreign company are 382, 386, 392, 93. But if 50% or more of paid up capital of a foreign company is held by Indian citizen, Indian companies or body corporates in India, or jointly by Indian citizens and body corporates, they will have to apply, or they will have to comply these provision plus any other provision which is applicable as if they were an Indian company. Okay. Yes. Then we will move to the provisions of cyber law. You are having personal data, the concept of personal data, data from which identity of a person can be obtained. You are having the concept of sensitive personal data, just like your fingerprint, your voice pattern, ATM pin, okay, then biometrics, etc. Okay, then you are having a rule to protect sensitive personal data. The punishment under section 43A is specified, punishment under section 72A is mentioned there. Then there is business intelligence, BI tools and all is specified. you are having online analytical processing, ad hoc intelligence, etc. So many BI tools and their features are explained there. Then cyber crimes are explained in next chapter. There are three kinds of cyber crimes. Against person is there, against property, against government. Against person, you are having cyber stalking, creating physical threat, obscenity, then defamation, hacking, cracking, spoofing, carding, fraud, and threat against a person. Squatting is intellectual property right of website are opened with identical names. Vandalism means any external items are coming and destroying your system. Hacking, virus, trespass. Terrorism, warfare, piracy, unauthorized information, the cyber crimes which are against the government. Okay, then moving to the concept of MSME, many students were asking me the doubt about the threshold in MSME. Threshold in MSME has undergone a change, but which is applicable from 1st of April 2025. But that will be applicable for your December examination. Your threshold will be not in excess of 1 CR and not in excess of 5 CR, 10 CR and 50 CR, 50 CR and 250 CR for June 2025 examination. So while computing turnover, exports will not be counted. Okay, while computing investment in plant and machinery, land, furniture and fittings will not be counted. Okay, then if you are making delayed payment to MSME units, you will be liable to pay compound interest, which will be 3 times the bank rate. The amount of interest will be disallowed under 43A of Income Tax Act. Okay, so these provision, and you will have to include the same in your annual accounts, annual audit and all. So this question was asked for December 2024 examination. You are having Insolvency and Bankruptcy Code 2016. So there is an application, you are having application made by financial creditor section 7, operational creditor section 9, then corporate debtor section 10. So under Insolvency and Bankruptcy Code, financial creditor, operational creditor or corporate debtor is making application to NCLT. If the minimum amount of default is 1 lakh, but government has raised the amount to 1 crore after COVID, 23rd of March 2020 by notification. That notification is not withdrawn, so the amount is 1 crore now. Okay, so the application will be admitted or rejected in 14 days. Then once it is admitted, the NCLT will be passing 3 orders. They will be declaring moratorium, making a public announcement, and they will be appointing interim resolution professional. Okay, your corporate insolvency resolution process will be completed in a period of 180 days. If it is not completed in 180 days, 90 days extension can be granted by NCLT on satisfaction of certain condition. Okay, anyhow, your CIRP should be completed within a period of 330 days, including the time taken for any legal proceedings. Okay, so interim resolution professional's duty is to constitute committee of creditors. Committee of creditor will be appointing either interim resolution professional or any other professional as insolvency resolution professional. Then insolvency resolution professional will be preparing information memorandum. It will be given to resolution applicant. Resolution applicant will be preparing resolution plan. It will be submitted to NCLT by insolvency resolution professional. It will be either accepted by NCLT or rejected by NCLT. If it is rejected by NCLT, that they will be ordering liquidation of that company. So next is corporate governance, the concept of corporate governance. Corporate governance means achieving the object of organization by considering all the stakeholders, or compliance of the law in true letter and spirit is specified as corporate governance. Okay, so while you are answering the questions based on corporate governance, you have to make sure that you have to add the provisions of Companies Act into your answer. So every provision in Companies Act will be related to corporate governance. So just mention 1 or 2 provisions in your answer, so the answer will be perfect. So as this is a quick revision, we have just covered only the major topics. So the time constraint is also there. So due to that, I have included only the major topics which is related to your entire syllabus. So the entire syllabus which we usually discuss within 125 hours or 130 hours are being discussed in less than 2 hours. I think 1 or 1.5 hours time you are discussing the entire portion. So some portions are left out. In some portions I have I was moving a bit faster, etc. Okay, so I think the discussion is clear. So the discussion is aimed to refresh your minds, to make the points, to make you remember certain points which you have learned. Okay, so if you are coming across any doubts, any queries, you can contact me directly. There is no issue. Okay, so all the best for your examination. Good luck. Thank you.